Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, we need to do a quick breakdown of Disney. They did report their earnings the other day, and I know that Disney is an extremely popular company. I know that because when I sold Disney, people were really upset at me for doing so, as if it was their money. I don't know why. But today I'm going to do a breakdown of Disney, tell you what I think of it based on the information that we have now and not the information that I had in the past, and then give you what they do, how they do it, and again, what is the central date that we're looking at, and if you are looking to buy, I'll give you the price that I would consider looking to buy it at. Now again, I want to focus this on a mini breakdown because the larger, more detailed breakdowns, you can find that in the members only. I've already talked about it before, but I did a 30-minute breakdown on Amazon, and it was extremely valuable. More valuable than the $10 you pay per month inside of the members only. I'm also going to give you guys a video, the members, a video on what stocks I'm going to buy for tomorrow. I'm going to show you the charts and kind of get back into that and show you, hey, this is what I intend on doing on Friday. All right, so that'll be for our members only. You can join that with this button, or I guess the link below, as well as the join now button right below this video. All right, so let's go ahead and get into Disney. So the first thing that I like to do anytime that I'm looking at any stock is, what do you make, what do you sell, and do those things connect together? One of the things I think is the most valuable thing, and Warren Buffett and others call this a moat. What is separating you from the competition, and how big is that moat? How replaceable is it, right? So for somebody like a Walmart, I mean, to me, I can go to Walmart and go to Target. That moat's not necessarily big. The power of Walmart is their size. That is something that's very difficult to replicate. But when it comes to Disney, I mean, there are other people and places and competitors out there trying to replicate it, but it is very difficult to do. Why is that? Well, one, Disney owns different types of streaming services, not just Marvel movies. They've got Star Wars. They got ABC with Grey's Anatomy, whatever my wife is watching this time of year. You got that. You've got Hulu. You've got ESPN. All of those things packaged in one place. And then instead of just having that, because there are some people that can copy that to a degree, though it will not have the history and legacy that Disney has done. And you can see, you know, what's going on with HBO and DC and their superhero movies just haven't been all that great. But they package all that together, and then they also give you an amazing world-class theme park. It is Disney World, Disneyland, and almost nobody else. Nobody on the face of this earth, I will argue you and die on this hill, that Six Flags is nowhere close to any Disney property, period. It's not. Now, Universal might have, you know, one inch closer, but there is no theme park on the face of the earth that competes with Disney. So you are, you know, started off at birth with Snow White or Lion King or whatever it is, and then you find out there's a real life place to get you anywhere close to that. You have to go. You're going to pay whatever that cost is. And then on top of that, you also have all of their t-shirts and merchandise and toys and video games and all the different ways that Disney can make money. I mean, Disney just released yet another Toy Story variant. I didn't see it, but Lightyear, like that. The first Toy Story came out when I was a kid, and they are still making those movies and selling those toys, which again is ridiculous. My son has a Woody toy now. I'm like, have you ever even seen the original Toy Story when I was your age? That's crazy. That is the power of Disney. Very, very few companies have been able to touch that side of the business. It doesn't mean that everything is all great. And in fact, I'm going to pull up my notes here. Disney is down 22% in the last 6 months, and they are down 33% over the last year. And the reason why I find that interesting is because what will be the point, other than the fact that we like investing in things we understand, right? And we like taking pride in some of the investments that we have. Because if I say I own Disney, I go and see the Thor movie or the Spider-Man movie or whatever, it's like, yeah, not only is this a good movie, depending on which one you saw, but not only is this a good movie, but like I am making money when people are buying tickets. And it makes you feel, depending on what type of investor you are and what you're investing in, it makes you feel a bit of pride to say, look, like, this is my company. I'm making money when they make money. Except again, the fact that they've been down 22% over just the last 6 months, and then down 33% over the last year. So the question is, like, do you just want to, what would be the purpose? Because if you're looking for the best stocks, I can't say at this point in time that Disney is that. It's one reason why I sold them last year, because it just had not been performing to the level that it had been doing at the last half or so of 2020. And in fact, and this was shocking to me as I started to pull it up, you got some really basic, non-innovative, what I would consider non-innovative for the most part, companies that have really left Disney from a performance perspective in the dust. They're not direct competitors, but it's still just like, hey, I could have had something that was really boring and normal and not as exciting and quote unquote prideful for me to own, that would have made me 2, 3, sometimes even 4 times more than what Disney did. And I even zoomed back and said, well, what would this look like even over the past 5 years, which is not what I typically do, but even in the last 5 years, these numbers are quite significant. So get this, Costco, Coca-Cola, and then Amazon. Now, Amazon's more of a tech company, so you would probably expect Amazon to do better. But when I look at 6 months, when I look at a year, and even 5 years, and I'll put this on the screen as well, Costco and Amazon and Coca-Cola way outpace a company like Disney. And a part of this is cost, a part of this is margins, meaning like how much is Disney really making compared to the hundreds of millions of dollars they have to spend on these films and keep these parks up and do all that type of stuff. In fact, when it comes to just their streaming business, they're not expected to be profitable from that perspective until 2024. And that is still not a guarantee. Now, on the good side of this, subscribers of Disney have finally surpassed Netflix, which is amazing to say because Netflix has been out way longer than Disney Plus has, but it does show you the power and pull that Disney Plus has. Like, my son loves Cars, the movie 1 and 2. I don't know where Cars 3 is. It's a movie that exists, but for whatever reason, it's not on Disney Plus. There's a strange mystery to me. But in either case, they've already surpassed Netflix, which says a lot. I mean, it's been around, what, less than 5 years or so, and you're already beating what had been the household name for streaming. We also expect, by we, I mean them as an analyst, they expect that park revenue is going to continue to rise and at some point come back and reach pre-pandemic levels, which makes sense. When inflation starts to fall, we know gas prices have already fallen to a degree, so those who are closer, more local, are likely going to go down there. Once flights and other things start to come back down, you would expect people to come back to Disney, especially when COVID and now I guess monkeypox are completely done with. You would expect that to start to rise as well. We'll see. But there are some positive things for Disney. The other side of it is the TV realm. The TV landscape is definitely changing. So one of the biggest things that helped Disney to get the profits that they're getting is ESPN. It's called the ESPN problem. And essentially, let's say your Dish Network or Cox Cable. I don't own cable, so I haven't had cable in like 10 years. So I don't know a lot of these names anymore. But in either case, they had certain like licensing revenue or affiliate partnerships, basically saying, look, I am a cable company. I'm going to pay Disney. I'm going to pay ESPN X amount of money so they can be a part of that cable package. Well, as people have cut cable and started to kind of splinter off and get their own streaming services, there aren't as many people saying, I also want ESPN Plus, unless it is bundled together with Disney and Hulu. That's going to be an issue that they're going to have to figure out. At one point, there was a fight between Disney and YouTube TV on whether or not YouTube was going to be able to garner ESPN and have them into their platform as well due to some of those fees. That was one of the biggest ways they had made money, and as this has fallen off, as cable cutting has become the norm, they're still trying to figure that out. If there are any hangups between now and 2024 in terms of people adopting the ESPN streaming platform, in terms of subscriber misses, that can also happen. That's going to be an issue for them, and that is something that, you know, that adjustment may not be something that is worth stomaching for some investors. So you're already down 33% in the last year, which is a lot compared to the stock market. I mean, again, Amazon, which was down significantly over the past year, still isn't that bad. Coca-Cola, which is really boring in comparison, is nowhere near close to being down 33%. So there's a difference between, I just want the company I like, I want the company I can talk to people about and say like, yeah, I own it, and the one that really makes me money. And I think that's the reason why most of us are here. Which company can I invest in that's going to help me travel more, be financially free, pay off debt, whatever it is that you want to do. And at this current point in time, Disney has not proven to be the best venue for doing that. Now here's the last thing. all that stuff that I talked about, all the stuff that you read about earnings, that's all past information and past data. There is no, future of, there's no credible thing that says this is where they're going to be in the future. That's all previous and past information. So the question is, how will they do moving forward? And it's difficult to call, as it always is. And when I look at the last 6 months, last year, things aren't going in the right direction. For me, Disney is still a sit out and wait type of investment, because I need to see that subscribers are going to continue to outpace Netflix and others, because Netflix was in this exact same situation prior to this year. They were consistently, for the most part, they were doing well, and then they did extremely well during COVID, and then things started to taper off. We had the Russia war in Ukraine. They cut off 200,000 subscribers. People are making different business decisions. Do they want to stay with ads and passwords and all that kind of stuff? And they got too big to a degree, and now they're trying to shift out and figure out what we're going to do. And now they're looking to partner with Walmart, and now they're looking to do all these other things and partnerships to offset certain parts of their revenue. Now Disney already has those other parts, and everybody is paying attention to streaming, which really makes this not a one-trick pony, but it's a highly leveraged pony, where we're all looking like, hey, if you don't hit this number in 2024, it might not look good for you. Right? And things might not go that well. They may have to start to cut back on some of the movies that they're making. They may have to start cut back in certain areas. And for me, I just don't feel confident enough, based on their prior performance and their financial results, that they are going to be better than the 3 companies I just mentioned in this video, or a ton of other stuff that is out there. And it just doesn't move me enough. That's not to say that Disney can't make money. Disney can be positive for the rest of the year. Disney was good today and yesterday, and the entire stock market was good in July. But again, if I'm looking at which one of these companies is going to make me the most money, I'm not entirely sure Disney is going to be the answer here. That's not to say that Costco and Amazon and Coca-Cola will be, but I think it will be very, very easy for us to find 10 companies that will do better than Disney over the next, let's just call it 2 or 3 years. So that is my thought about Disney. Let me know what you think in the comments below. Like it, love it. Where do you think Disney is going in the future? All right, that is it for me. I'll talk to you later. Bye.